This video is to cover chart patterns and candlestick patterns. One of the things about chart pattern is it's a group of candlesticks, more of a sector of candlesticks in order to develop the pattern. So some patterns, if you're basing it off the day chart, it may take a week or two to develop the actual pattern. So for instance, if you're looking at a chart pattern, this can help you signify uh, several trading opportunities. One thing is looking at this body here and this wick here. So one of the trading opportunities you look for here is you look at a combination of support and resistance and candlestick pattern is once it got to this price, then you can look at how the candlesticks react during those price actions or that area. And this could be your reason to sell off back down to support. With chart patterns, they are considering a bigger perspective, but you may be looking for, again, different reasons to enter the market, really. So if you actually look at the break of this neckline here from this double top, there's an indication that we may continue back down to this level. And then once it gets to this level, we may see it bounce off of this area. But as you can see, it's a very choppy market here. So the idea of a chart pattern is looking at a bigger sector versus just a small group of candlesticks to justify your decision of where the market may go. So these chart patterns can happen on any time frame, any currency pairs. If you're looking at a smaller time frame, then they may happen more frequently, but your projection may not be as big, meaning that your pip amount or your the distance of how far the trade may go could be a lot less. So again, like here we had more of a double top, double bottom here. We have resistance, resistance, and then here are your bottoms, and then here's your breakout. So there's different ways to approach double bottoms and double tops. A couple ways you can look at it is that this is resistance, and then you come to the right, look at candlestick patterns to show you an entry point to look for it to trade back down to support. Or you can look simply for the breakout of the support to trade downwards to the next support resistance level. And these candlestick patterns can help justify, if this market is possibly going to reverse or continue going downwards. Okay, so that's the great thing about it. You can see this was support, support. Here is more like a bigger candlestick pattern. If you take this whole sector out, it's like a W formation. So that's a candlestick pattern, or excuse me, a chart pattern. As you're looking at this whole sector here, and then here's your breakout. Whereas candlestick pattern is right here, we're looking at the closing and opening prices and then looking at these wicks in details of how the market's reacting at those support resistance levels can help us find reasons to enter the market, putting stop losses here, trading back down to support. So you can actually simplify your trading based on looking at the trading opportunities that may not arise as often, like these chart patterns. The candlestick patterns may arise a lot more frequently, like these bouncing off support resistance and looking at the closing prices, seeing how the market reacts at these support levels. You can see the long tail looking upwards, and giving you those trading opportunities that give you low risk and high potential profits. Okay, so just to keep things simple, all you're doing is you're looking at how market has reacted at support and resistance. Chart patterns use support and resistance. They're just looking at a group of candlesticks and looking at candlestick patterns to help you justify how valid that candlestick pattern or chart pattern is, to help you take advantage of those trading opportunities. Thank you for watching this video.